All right. Hello, everybody. Welcome back to the channel. We are back on another market close. Dude, the amount of jokes you guys have in the chat for why I'm late. We're a minute late, bro. We're like 30 seconds late here, not even a full minute. The amount of jokes, bro. Some of these comments are actually, they need to go in the Hall of Fame for some of these comments. I leave him alone. He's with his dentist. Goodness gracious. Anyway, dip buyers came back with a vengeance, folks. Dip buyers came back with a vengeance. Markets are green. We have added $800 billion of market cap today. $800 billion of market cap. 663 on the S&P. We got all the way up to 664.6. Got a lot of different headlines and different things to talk about. But I mean, the kind of punchline here is we are getting into earnings tomorrow. We'll do a bit of a preview on what we've got going on with bank earnings, because I think it's going to set up really what happens with overall stock market earnings going into Q3. But as you can see on the screen, Google up 3%, SoFi up 4%, AMD up 0.5%, NVIDIA up 2.4%, Hoodie 1.1%, Palantir up 1%, Tesla, nice little 5% move, 435 right there on Tesla. Tesla got to 437 at one point. Apple is green, SMCI is green, Ethereum and Bitcoin, which were pretty weak when I left at the market open. Bitcoin was almost below 114. Ethereum was actually almost below 4,000. Nice rebound. Those two are green on the day. Your energy names, like an Oklo, that is up 18% on the day. Centrus Energy, LEU, that is up 10% on the day. Bloom Energy got a $5 billion deal with Brookfield, 27% on the day. Pretty damn incredible across the board. Even Quantum making a move. D-Wave, 40.46, that's up 22%. Rigetti got above 50. 53 right there, up 20%. As you can see, the dip buyers came back and they started to essentially buy as much as they could based on the decline that we got last week. I mean, there were a lot of dip buyers on Friday, but today you're seeing pretty much across the board. MicroStrategy's up 3%. ASTS, look at that, 91.51. It hit 92. That's an all-time high. A lot of these names continue to get buyers to pile in, maybe institutional, maybe retail, maybe a mix of both. But I think the core argument here is that the China-Trump situation probably was not the top of the market. And eventually we're going to find out if we ever can get back above 673. But I think most analysts that have their $7,000 price target continue to have their $7,000 price target. And it doesn't seem like that's necessarily going to be going away anytime soon. Yeah, it's the most hated V-shape rally 2.0. And it's not a full V-shape yet. We got to get back to all-time highs, but it's a pretty close one, as you're seeing on the S&P 500 right there, up 1.53% on the day. Now, the biggest deal of the day, and we'll talk more about this after the bell right here, was Broadcom. Broadcom up 10% on the day. Openai signed a 10 gigawatt deal with Broadcom. They put out an entire podcast with both of the companies actually talking about the substance of the deal. But once again, it continues to lead the argument for how entrenched OpenAI is in this entire ecosystem. $100 billion deal with NVIDIA, 6 gigawatt deal with AMD, $300 billion deal with Oracle, and now about a $300 billion deal with Broadcom for custom ASIC chips, which is quite incredible. That deal kind of sparked the rally, I think, in all the data center plays. So IREN, that's up 7% on the day. Bitfarms, is that above $5? That is well above $5. Look at that, 28% on the day. CleanSpark, Marathon, all those names. I mean, if OpenAI is signing these multi-gigawatt deals with multiple companies, Sam Altman saying he wants to get up to 30 gigawatts in the next 5 years. I mean, yeah, you're going to get a lot of the Bitcoin miners that are turning into data centers essentially to catch a bid. Even Cypher got that Google investment a month ago. Look at Cypher up 20% on the day. TeraWulf as well, not doing too bad. And then that's not even to mention the most important sector of the day that was running ever since that China news, rare earth minerals and metals, 95.83 on MP, USAR, also getting a big boost, up 17.9%. TMC, the metals company, that one got a massive boost. That's up 17%. And then you had TMQ, the company that Trump will be taking a stake in, that is up another 11%. I mean, this is just incredible to witness the re-rating of these companies in real time. And if you believe that this data center stuff is not slowing down anytime soon, which none of the evidence that at least I'm seeing is a reason for it to slow down, then it looks like these companies are going to continue catching a bid. Nebius right there, that's up 4.8% of the day. 135.88 is what you have on Nebius. Now, I did buy a little bit more of Amazon today. I don't know, dude. I just feel like Amazon, again, we've gone through the thesis plenty of times on why I think it's undervalued, why I think it should run towards the end of the year. So bought a little bit more Amazon, I think at 220. I bought it at 222. It's not that big of a difference in terms of the entry price right there. But I think they're going to have a strong Q3, and I think AWS is going to surprise to the upside. And as long as that plays out, I think Amazon does okay. So I bought a little bit more Amazon, bought a little bit more Grab today as well. Google right there up 3%. But across the board, you're just seeing a lot of these names rebound from where they were on Friday, at the lows on Friday, which is very nice to see. CrowdStrike as well, 508. That is up 2.95% on the day. Again, Oklo, massive move, up 18%. I know the company doesn't have revenue, but it's in the hottest sector in the market, which is energy. Every chart that we look at every day shows how much we're going to need more and more data centers, or how we're going to need more and more energy to fuel the data centers, and how we're going to need more and more electricity to just naturally make sure the price doesn't spike up for the average person in America that is using electricity in their home because of those data centers, and nuclear is going to probably play a role. And as a result, I think Oklo is getting more of this momentum. POWI, this one got a deal with NVIDIA this morning. That's up 23%. We talked about that in the morning when it was up 10%. So another 14% since we talked about it. $2.4 billion market cap, small company. But again, as we see this energy ecosystem continuing to thrive, you have companies like POWI, which aren't really, talked about companies. Average volume is 748,000 shares. It was 6.3 million shares today. So 6x the volume, simply because of the partnership with NVIDIA. And it doesn't look like that is slowing down. SMR, NuScale Power, that's up another 15% on the day. And then Nano Nuclear Energy, NNE, that one is up 18% on the day. BMNR also didn't do too bad. I mean, now that Ethereum got above 4,200, there you go. We're at 56. We're at 53 when the market open was ending. So it's nice to see that one gap up a little bit above 56. Again, it got to 47 on Friday night. So if anyone bought that dip, not too bad. But you are seeing crypto do okay. And you are seeing the data center plays continue to get some love. Did you buy shares or calls of Amazon? Just shares. Not buying any calls at this time, just shares. KRE is something I'm looking at as well. Again, the banks are going to start to report, and we'll talk more about the banks after the bell, but KRE is barely up year to date. This is the regional banking fund ETF. XLF is up like 9%. So, I mean, if you want to be selective with certain parts of these banks, whether it's a JP Morgan, Goldman Sachs, Citigroup, they have run a lot this year. So, it wouldn't surprise me if they kind of take a breather tomorrow and don't actually perform. But the actual earnings growth I'm looking for to be pretty good. And I think that gets us into the conversation of what to expect from earnings growth. The banks are set to report tomorrow. If the financials can give us a good start to earnings, and we see double-digit earnings growth throughout most sectors in Q3, which is pretty much what is expected from every analyst that I've been reading in terms of the reports this morning going into the bank earnings, then I think we're going to continue to see an argument for multiple expansion and money coming off the sidelines. Now, the pushback to this argument is, well, what about the froth in the market? And I think you have to acknowledge that there is froth. But if NVIDIA was frothy and not putting up the earnings growth, there would be an argument. If JP Morgan was frothy and not putting up the earnings growth, there would be an argument for, hey, this is too much. There's a structural problem in the economy. Oklo being frothy, which I think most people can agree, yes, it's probably a little bit frothy, $25 billion company with no revenue, isn't that big of a deal, because if $25 billion goes to zero, again, it's whatever, right? It's not a $4 trillion company going to zero. And second of all, a lot of the companies that are perceived as frothy and might legitimately be frothy, they're in a sector that's getting a ton of excitement and opportunities and potentially the ability to get revenues. I mean, even for the people that feel that quantum is incredibly frothy, JP Morgan today announced a $1.5 trillion investment, and they announced that part of their investment is going to go to quantum companies. So when you have narratives like that going around, even if you think there is some broader froth, I don't know if it's enough to say that as a top to the market or the market's in a bubble. And as a result, you're seeing the dip buyers come out, and they are continuing to buy. S&P 500 right there, up 1.62% on the day. What do you think about Domino's? I don't know much about Domino's, but Papa John's got a buyout offer today from Apollo at $60 a share. Stock's at 45. It's up 10%. So obviously the market's not really thinking the buyout's going to go through, but they are kind of thinking there's a chance for it to go through because it's up 9%. So if Apollo ends up actually taking Papa John's private, then you might see Papa John's get bought at $60. But that was the offer that came out today. That's what caused the spike. I think it got it up to $50.95 at one point, now down to 45.65. But Domino earnings are going to be important because we're going to have to see how is the consumer doing, and pizza is one sign of seeing how the consumer is ultimately playing out. Here is what BMO said. This is one of my favorite analysts on their call on where the market's going, their kind of thoughts on the China sell-off, and then we will get into this market close.
That just came to me. But I think it was, oh no, here we go again with respect to the tariffs. And we knew that China was kind of the remaining story. We also know as investors that there's been so much emphasis, not just on AI, Mike, but also with respect to NVIDIA, Broadcom, and some of the big leaders in that. So of course, we took some air out of the wind there in the sails in terms of the ship that is the bull market. When we talk about markets, they're rarely linear for long. This has been a very exciting bull market, the cyclical bull market that started in October of 2022. We actually started to talk about that cyclical bull in November of 2022, and kind of people thought we were too early on that, but look what's happened. But I do think that what's happened here today is a logical kind of recovery from, oops, I'm going to overreact again. And I think we're in one of those markets that until we get into earnest, heavier earnings side of things, which we ultimately think are going to be the leading us kind of out of this, I think you're going to continue to see more volatility. Plus, it's Columbus Day, so there's some people that are off.
Yeah, and of course, bond market is closed.
So again, we don't have as much volume as you would have on a typical day where the entire market was open. But the same argument from BMO that's been calling for 7,000 on the S&P for a while, and very similar to Morgan Stanley, JP Morgan, Goldman Sachs. By the way, the JP Morgan trading desk today said buy the dip. So they said, hey, this is a nothing burger that happened on Friday. And that's kind of unanimously across the board from what I've been reading this morning. All of them are saying this China thing was a nothing burger. Trump is using leverage, yada, yada. It's like he's trying to negotiate. Like it's not something they should be that concerned about. In fact, JP Morgan said the top 3 stocks that were bought by retail investors on Friday's 3% drawdown, and we're going to get a lot more data on how much retail actually bought on Friday in the coming days. NVIDIA, Meta, and Hood. NVIDIA, Meta, and Hood. I didn't expect to see Hood up there, quite frankly. NVIDIA and Meta makes sense. But I guess people took advantage of buying Hood as well. So those were the 3 names that were bought heavily by retail investors. And, there was a lot of other names that we saw in the chat on Friday. But again, it became a buying opportunity. And we haven't had a full recovery to say that we're out of the blue or out of the woods, I should say, in terms of all the issues that we dealt with on Friday, because, it still created a meaningful drawdown. But another $800 billion in market cap being added today is not bad. And it definitely is a sign that hopefully we should be on a path for recovery. NVIDIA right there, 188.35. You got Circle, that was up 3.6%. AppLovin, this was at 570 in the morning, 590. That's up 3.5%. Enphase up 1.5%. And then Microsoft up 0.5% on the day as well. And then Tesla right there, 436. That is also green. We are 2% away from all-time highs. That is correct. 2% away. And, given the market action today, it doesn't feel like it's going to be crazy to necessarily get back there if earnings growth is going to be good. And that's the big thing. We got 40 seconds until the market closes. We got earnings growth. We have earnings coming up. I think we're going to have really good earnings growth. And as long as that earnings growth is not bad, like, again, it's really not that hard to make the argument for why people are buying stocks today. If you've got a good earnings cycle that's coming up and the banks are going to help prove that tomorrow, you're probably going to get more money coming into the ecosystem. AMD right there, 216 at 37. We got about 20 seconds until the market closes. Tesla, 435. Broadcom was the real story of the day. We'll talk more about them on the close and what's going on with Openai. But Openai continues to prove that they are one of the most important companies in AI. And as a result, Oracle, Broadcom, AMD, NVIDIA, all of them are starting to depend a lot on what Openai can do. Monday, October 13th, 4 p.m. Thank you for everybody for being here. The stock market is now closed. All right, we are done for the day. The Monday after the sell-off on Friday. I mean, there were some people saying it would be a Black Monday. Thankfully, it didn't end up being the craziest Black Monday, but it is nice to see a bit of a rebound right here, and this rebound being stronger than what some market participants expected. S&P 500 closes the day 1.52% up, basically getting 50% of that 3% drawdown that we had on Friday, and that's where we get the close. Robinhood, 140.70. We actually have a news update on Robinhood that we'll talk about in a second. We have a quote from one of their VPs of products, and so we'll talk about that in a bit. Palantir right there ended up about 1% on the day. Tesla, 5.5%, not too bad for Tessie. NVIDIA up 2.89%. NVIDIA did break 190 at one point today. AMD up 0.5%. AMD seemed like it was down based on that Broadcom deal. I really don't think that's a reason for AMD to be down. I mean, it's not like OpenAI is not working with AMD, so it was kind of weird that it had that reaction, but AMD was down a little bit from the pre-market. SoFi, 4% on the day. Google up 3%. Grab up 1%. Reddit up 2.5%. Amazon up 1.69% at 20 on the day. Meta 1.4. That was at 690 on Friday. Now it's 715. Salesforce at 258 or 248. PayPal continually. It's PayPal, dude. It's freaking PayPal. 68.90 on PayPal. That was down about 1%. Elf 2.3%. Apple was up 1%. SMCI was up 3%. Ethereum trying to break 4,300. Bitcoin 115.8. AppLovin, that's up 3.5. Uber was up 1% on the day. Rocket Lab, I think, closed at 68. Rocket Lab, never mind, 65.42. Still a nice little rebound, up 1.8% on the day. Nebius got the $135 close, not too bad. CoreWeave, I think, actually had a little bit of a dip. No, it recovered. It was dipping in the morning, now back to 141, fell all the way to 137, which is not too bad. Iran, Bitfarms, Cypher, all of them up 7 to 8% on the day. Many of them up even 20%, like Cypher. There you go, up 20.1%. That was green. Quantum, massive, massive day across the board. D-Wave hitting all-time highs, up 22% on the day. Oracle as well. Did we get above 300? We are 307, up 5% on the day. Great day for Oracle. Looks like that Broadcom deal was super bullish for Oracle as well, catching some of that momentum. And then Broadcom right there, up 9.8%. Big Bear got a partnership this morning, and that helped them get some green. That touched 920 at one point, 22% on Big Bear. I mean, it shows you the appetite on some of these names is pretty damn strong. That's green. Again, this thing was below 5 a couple months ago. So Big Bear with that partnership this morning, 885. That one continues to be green. I guess the most important argument one could argue is not even Broadcom or OpenAI, but rather gold. Gold surpassed an all-time high again, 41.25, up 3% on the day. And silver did the same thing at $50.53. I mean, gold and silver are both up 70%. Your gold up 55, silver's up like 68%. It's really incredible. It's really, 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 really incredible to see. But I think this is also a function of that broader argument that says, hey, cash is not the place where you want to be. And if cash is not the place where you want to be, you're going to start to see a lot of diversified assets continue to catch a bid. So pretty incredible to end out the Friday after one of the worst sell-offs we've seen in the past 6 months. ASTS gets the $90 close. Congratulations to those that are in ASTS. This is a big one. It basically was about to get the $90 close on Friday, and then the whole Trump thing happened. So this one rebounding a real proper V-shape down from the low 80s back up to 90. And as John says right there in the chat, 7.4 trillion is still in money market funds, which inevitably, probably some of it comes out. EOS Energy, another big energy name, that was up 24% on the day. I mean, I think today was just one of those days for energy. And the reason I think the energy names took off outside of Bloom Energy, because they had a specific reason with their Brookfield deal, is that OpenAI partnership with Broadcom. I mean, when Sam Altman is talking about the numbers that he's talking about, I think the entire market is thinking, how is this possible without more power? And as a result, these names end up getting a lot of love. This is a clip of Sam Altman as we head into some of the headlines now, as the market is closed, talking about how much energy and how much demand we're ultimately going to need.
Think about how much more the world would like to do than they get to do right now. Think about how much more the world would like to do than they get to do right now. If we had the 30 gigawatts today with today's quality of models, I think you would still saturate that relatively quickly in terms of what people would do, especially with the lower cost we'll be able to do with this. But the thing,
if we had 30 gigawatts of energy that we could deploy on data centers, Sam Altman is saying that still wouldn't be enough. I mean, that's the level that OpenAI is thinking at, and maybe they're being too hyperbolic, or maybe they're really underestimating it. But that is why I think your Cyphers, your Irans, your TeraWolves, your Bitfarms are really catching a bid.
we have learned again and again is, let's say we can push GPT-6 to feel like, 30 IQ points past GPT-5, something big. And that it can work on problems not for a few hours, but for a few days, weeks, months, whatever. The amount, and while we do that, we bring the cost per token down. The amount of economic value and sort of surplus demand that happens each time we've been able to do that goes up a crazy amount. So you can see, to pick a, I think, well-known example at this point, when ChatGPT could write a little bit of code, people actually used it for that. It would very painfully paste in their code and wait, and they would say, do this for me, and paste it back in and whatever. And models, couldn't do much, but they could do a few things. The models got better, the UX got better, and now we have Codex. Codex is growing unbelievably fast and can now do a few hours of work at a higher level of kind of capability. And when that's possible, the demand increase is crazy. Maybe the next version of Codex can do like a few days of work at kind of one of the best engineer level, or maybe that takes a few more versions, whatever, it'll get there. Think how much demand there will just be for that, and then do it for every knowledge work industry.
Okay, so I know his voice is a little hard to listen to, but the point is he's saying, hey, we have multiple verticals that are going to have levels of demand that we can't even imagine. And as a result, 30 gigawatts of energy wouldn't be enough, because just the coding version of ChatGPT, which right now I think Anthropic is kind of the undisputed winner in terms of being the best model that can actually output meaningful code. ChatGPT or OpenAI is saying Codex, which is our version of that, is growing exponentially. Then they have Sora, then they have the actual ChatGPT product, then they have all their enterprise API calls. I mean, you have all these different verticals, and now multiply that by XAI, by Gemini, by Anthropic, by all the large language model companies. I mean, you just have a massive amount of compute. And then you think about the humanoid robotics companies that are going to need to train their chips to be able to be good for the humanoid robots. And if you have billions of robots walking the earth one day, like, it just really does feel like this is the narrative that is overtaking the market. And even though a lot of these data center companies don't have the revenue, they don't have the facilities, or they don't have the ability to execute on the facilities as quickly as some people may think, they're getting the premium. And the best ones are getting a really good premium, like Iran, because they've shown a lot of capacity to actually execute. Because the demand is there. And if the demand is there, it's likely not slowing down anytime soon. Speaking of OpenAI, this is what Oracle CEOs had to say today when they were questioned on if the money would be there from OpenAI, because the reason their stock went from 230 to 300 is primarily because of that OpenAI deal. And here's what they had to say.
It's a bet on the success of AI. Obviously, we have a great relationship with OpenAI, but there are many different customers that are all going to need this type of infrastructure for many, many years to come.
Meaning what, though? I mean, they're supposed to pay you as much as $60 billion a year starting in not too long. They're going to be good for that money, I would assume.
Of course. No, I think look, this is exactly Mike's point. If you look at the financials, if you look at the results, if you look at the growth, if you look at the products that we're able to build with this technology, this is unlike anything that's happened before. These are not typical ways that companies have been founded and grow. I mean, just look at their the rate at which they've grown to almost 1 billion users. That's just unheard of.
Yeah.
And
all of this is unheard of, frankly. But the numbers that we're talking about are unheard of as well.
And I think that's what people are struggling with, is they go, okay, is this unheard of in a bad way, or is this unheard of in a good way? And we think it's unheard of in a very good way.
I wanted to follow up on that then.
So again, you got the Oracle CEOs saying, dude, of course, that's their exact wording. Of course, they're good for that money. They are expecting to make sure that OpenAI is going to be able to pay for this stuff. And, as long as OpenAI is good for that money and there's an ROI, and you hear the Oracle CEO saying, look at their growth, we expect that growth to continue. That's how I think this momentum around the broader AI trade continues. By the way, Palantir looks like they just confirmed earnings on November 3rd. Monday, November 3rd. I know Palantir has been relatively quiet over the past couple months. I mean, the biggest catalyst is going to be earnings. There hasn't been too much beside that. But I think the numbers will probably talk for themselves. I mean, I'm expecting at least 50% revenue growth. We basically got 48.5% revenue growth last quarter. So it looks like November 3rd, we have Palantir, and then Hoodie on November 5th. Hoodie on November 5th. So that first week of Monday, or that first week of November, it's going to be a pretty big week. It's going to be a pretty big week. Amit, are you going to do a deep dive on energy? Yes, I've already started a lot of research on energy. I'm compiling a lot of sources, trying to understand what are the best opportunities. Steve has been doing some research on this as well. I mean, really with energy, it comes down to, are you going to bet on like a re-rating on ExxonMobil or Chevron? Or are you going to go to the EOSCs of the world, or the Bloom Energies of the world, or the Oklos of the world, or the Centrus Energies of the world? Like, I think, and obviously you could pick both, but like, what is kind of the best route logically going into 2026 if one is bullish on energy? I don't have the answer to that question yet, but I have started the research for it. I'm leaning towards the latter versus the former. I mean, I think Chevron and Exxon will matter, but some of these other companies, and just like the battery technology solutions in some of these companies, like they're able to move faster. And quite frankly, their market caps are smaller. So any catalyst is able to move the stock faster. And so I think a lot of those names continue to get some excitement. But yeah, I have started working on that, and hopefully I'll be able to put out that research very soon. Bitmine right here, 56.85, closes above 56 for the day. Not too bad. That's up a little bit more after hours as well. And that's getting some green. along with some of the energy names that are still moving after hours. S&P 500 right there up 1.52% for the day. CEG is a bigger one. I mean, that stock is Constellation Energy. They signed a big deal with Meta. They were up 3% on the day. See, even CEG, there was no catalyst for CEG to go up today, but just the entire sector went up based on that Broadcom deal, 57% year to date. So the other question is, which is important, like, are the, like, and this is a very important question, are these stocks so richly valued that deciding to take a bet on these energy names could end up being, not the best bet? Like, maybe, these were good bets 5 months ago, and now it's getting a bit aggressive. I mean, even the rare earth mineral stocks, take a look at this graphic right here. They're all up at least 350% on the year. Most of these rare earth names that we've been like just exploring on the channel as we've been seeing their names pop up, they don't have any revenue. They are getting a premium on the perception that the decoupling of the United States and China supply chains, specifically around rare earth minerals and metals, is going to be enough to provide all that demand, which is not a horrible thesis. And same thing from an energy perspective. A lot of those companies that don't have revenue, eventually the assumption is that data centers are going to need so much energy that they should be getting a premium, and we should pull forward that growth. But none of it's there yet. And so it's one of those things in the deep dive, which is like, hey, do you feel comfortable taking a risk at these valuations? And I don't know yet. I don't know. There's got to be some more work to be done to see if that is the case. But I think over the coming years, it doesn't seem unlikely that we're not going to need energy, and we're not going to need rare earth metals and all the other things that have been starting to get some excitement. I mean, are there any stocks currently with any good entry points to get into, or is it all too high? I mean, look, the drawdown from Friday definitely made a lot of things more exciting. I think grab below 6 is exciting. I think Amazon still at 220 is exciting. I mean, even Meta was at 800. It's not like Meta's the cheapest, but Meta's also not back at 800 like it was 2 months ago, right? Obviously, PayPal, if you want to take the risk there, but that's relatively depressed. I mean, there are definitely opportunities now. AppLovin, are you willing to deal with the SEC probe? This is down from 750. It is an opportunity. You just have to be able to assess the risk. I don't think Robinhood's like the best opportunity in the world, down from 150, but nonetheless, it's not at 153 anymore. So that is also potentially an opportunity. But realistically, I think a lot of these names come down to, do you have a trajectory where you can see the earnings growth over the next 5 years? If that's the case, a lot of the market probably is not as expensive as people would say it is. In fact, someone who disagrees with the market being super, super bullish is none other than Howard Marks. So for those that missed it today, he said 3 main things. Number one, he said, I don't see mania in the market right now. Yeah, UNH, that's another stock that's probably undervalued. S&P is expensive, but the quality of companies are much better. And I'd struggle to call the market a bubble right now. I mean, I did not expect Howard Marks to be this bullish. And I'm not saying he's like gung-ho buy the S&P, buy AI stocks, because he doesn't have any exposure to them. But dude, a month ago, if you listen to his Bloomberg interview, he definitely sounded way more cautious than he sounded this morning on CNBC. And I don't know what changed in the past month. Maybe he just saw a little bit more of the actual progress of some of these AI companies. And he kind of concluded, you can't say that this is mania euphoria if the earnings growth is there. I mean, no fund manager, no matter how much of a value investor they are and how much they don't want to pay expensive multiples, can deny earnings growth. And I think that's why the market continues to do what it's doing. Definitely not the most bullish, but also I don't think the most bearish on what we have in the market. UNH, how did that do today? That was at 350, 359. Okay. So that was up 1.2% as well on the day. Let's go to the stock draft. I think Matt's still probably in the lead right here. Yeah, Matt, 46.7. I'm at 41. Steve's at 8.3. Tanner's at 21. Then Chris is at 12% on the day. Do you think we'll ever see April lows again? I think it's possible, but it's going to be really tough to see April lows. I mean, April lows, you're talking about Robinhood going back to 29. You're talking about Iran going back to $10. No, Iran was like at $7. Like it is hard to get those opportunities again. I think Friday was like a good enough taste of what somewhat of a drawdown would look like. But then look at what happened today. The dip buyers came back on a day where, a lot of financial institutions are closed, including the credit market and the banks. But still, so much money came into the markets today just off the idea that maybe this is one of the best opportunities that we have. So I don't think we get April lows again, but we might see some inevitable dips across the way. Amcor, nice 8% move today. I mean, again, Amcor did not deserve to go to 28.50. The stock is relatively cheap, in my opinion, trading at 1.15 times sales. So for anyone that got in last week at 28 or 29, you had that opportunity on Friday, and it jumped up on relatively little volume too. I think this was just algorithmic that this one didn't deserve to be down as much as it was down. And so it made a move higher back to kind of where it was trading at before the drawdown. And I think that happened to a lot of different stocks today. Like SoFi went from 25 to 27. I mean, nothing really changed last Friday to bring it down to 25. Nothing really changed today to bring it back to 27. So a lot of these names just kind of rebounded. Same thing with Google, went from 232 to 244. But it created opportunities. It created opportunities for a ton of different people. Is Tim Cook stepping down? I don't think so. That headline would be pretty wild. Tim Cook. Now there was a report from Bloomberg last week that one of Apple's VPs, this guy right here, John Turnus, is getting ready to replace Tim Cook. I don't think they would announce that until the beginning of next year if it does happen. If they announce it on the earnings call, that would be kind of crazy. I mean, I think a lot of investors would need some time to be associated or learn how to associate themselves with a new CEO. I mean, Apple's an important company. It's 6.2% of the S&P 500. So that would be a big change. So I feel like they would make that announcement in a different way. You guys are saying he's retiring? I mean, I don't see the headline of him retiring. I feel like Apple stock would give us a reaction if he's retiring. I mean, eventually he is, but probably not today. At least we don't see that news today. But we will keep an eye on what goes on with Apple. Apple stock right there at 247.50. Bitfarms won't quit. Dude, Bitfarms, this thing was below $5 in the pre-markets. It was like $4.50, continuing to move after hours. Now, see, here's the thing. Like, is this just a sympathy trade with Cypher and Iren for all the people that miss Cypher, Iren, TeraWolf? Are they just jumping into Bitfarms? Or did Bitfarms announce something that is making the stock go parabolic after hours? I mean, I didn't see a headline all day from Bitfarms. I don't see a headline after hours on Bitfarms. So what is it? I mean, I think it could be a mixture of both, but just the sheer excitement, I think, is getting more and more people excited. Amid to use stock lending feature on Hood. I think I have that enabled. It gets you like, $30-$40 a month if you loan out your shares to short. So I have to check if it's even enabled or not, but it's not the biggest feature for me. But if you have a lot of shares of a stock, then stock lending definitely does add a little bit of yield to your shares. Wolf right here. Are we 18 after hours? TeraWolf 1396. Not there yet. I have not looked into NKLR. I know this is the alternative to Oklo that people are thinking of. This is another nuclear name, NKLR. It was up today, just like Oklo. Isn't this a SPAC? Yeah, this is a SPAC company, so it's up 84%. It's SPAC'd on Thursday, and the reason it's up is probably because a lot of people think it's going to SPAC into some massive nuclear name, and that's why that's green. I mean, again, dude, a lot of these names, they're just like, they're running for the hell of running with it, which I think deserves some caution, but they're also in sectors that matter. And it's hard to deny that those sectors are going to continue to matter. This was Trump today. He was at Egypt announcing the Israel-Hamas deal. And here's what he said about World War III.
Means so much. There were so many people who said the Middle East, and this has been going for many, many decades. I've read it many times that World War III will begin in the Middle East. It's not going to happen. That's not going to happen. There was a time that you would have thought it could have, but it's not going to happen. There won't be World War III, hopefully at all, but it's not going to start in the Middle East. We're not going to have a World War III if we're smart. There'll never be a World War III. Means so much. There were so many people who said...
It was a pretty long peace summit. You had a bunch of European leaders, including the UK Prime Minister, Italy's President, Macron was there. So you had a bunch of the Europeans that were there. And look, Trump is getting the credit from a lot of different parties. I mean, even Time magazine put him on the front cover and said that underneath this president, is when you finally got some peace in the Middle East. So from a market perspective, the question is going to be, hey, do the markets interpret this as positive just because there's going to be less geopolitical instability outside of what's going on with Russia and Ukraine? And we're going to see over the coming months, but it's definitely not a bearish thing to see happen in the broader markets. I think Carney was there. I'm not sure if Carney was there, but I think he was. HOND, have I looked into that? No, I've heard of this name. Oh, this is another SPAC? Goodness gracious, bro. Who's sponsoring HOND? That SPAC was up 10% today. When did this one even go live? I mean, Tom Lee still has a SPAC that hasn't officially gone live. Oh, this has been live since like January. So who's sponsoring HOND? It's pre-SPAC. I have no idea who's a sponsor for that, but whoever is. I mean, see, look, this is okay. So one thing that's really important as we get into this time of the year, and some people might like hearing this, some people might not like hearing this, but you don't have to chase everything. You really don't have to chase anything. I mean, I have not really been into the rare earth metals or the super speculative energy names like an EOSE or an Oklo or stuff. And I'm like, honestly, bro, I'm not really feeling that much FOMO because it's been a good year. I kind of don't want to mess it up by getting super excited about Oklo at 171. It's like, if it goes to 250, God bless. But like, I don't know if I want to take that risk. So I already kind of FOMOed into Iran at 28. I should have FOMOed way harder at 28. But like at 64, I don't know if I'm going to easily be able to FOMO into it. I just don't. Even though I think there's a really good fundamental thesis and you have a lot of price targets at that $7,500 range. It's just a question of, do you buy a stock that's up 6x in 5 months? And do you need to, right? Like, is your performance so bad towards the end of the year that it needs to, run up by chasing a lot of these? Like, the question is, do you need to chase? And if you don't need to, then, maybe you don't. And you don't have to feel bad about not chasing either. Bitfarms right here, trying to run up to 6 after hours. I don't see any headlines after hours, folks. So Bitfarms, whatever run that's happening on Bitfarms, that looks like retail is just piling in. Yeah, I see nothing. I see 0 headlines. Absolutely nothing. That's got to be people chasing Iran, chasing Cypher, chasing TeraWolf, and using Bitfarms as a $5 stock as their proxy to chase. If someone has a headline, let me know. But I do not see it. Sam says you don't need to chase these stocks, maybe a trade, but not long-term. Yeah, I agree. And also it's like, look, if you're going to buy Bitfarms right here, like you got to know something about Bitfarms. You have to know about their mining facilities and their ability to how many GPUs do they have, all this stuff. I'm pretty sure a lot of people are buying it, not knowing any of that stuff because it's a sympathy trade because they missed Iran, which is fair, but you just have to be honest with yourself. Like when I bought Iran, I didn't know that much about it, but I saw the Nebius deal and I was like, you know what? Iran probably is going to run and I should have bought a lot more, but I bought it at 28 and I was like, all right, it is what it is. But I was honest with myself. And if it fell, I would also have to be honest with like, I probably deserve to bag hold if I didn't know that much about it. So I think you're seeing a lot of that excitement right now, definitely after hours with a bunch of these names in the data center space. And the question is, do you want to participate in that? And do you need to participate in that? Or do you just freaking buy Amazon, which maybe is going to barely move a couple cents a day, but you'll sleep better at night because it's Amazon. What was the hood news? Okay, the hood news is we got a quote from the VP. By the way, there were 75.5 million calls on the Mag 7 stocks today, so you had a lot of bullish momentum on Mag 7. Reuters reported that trading platform Robinhood Markets is open to potential acquisitions in the fast-growing prediction market space. One of the vice presidents and general managers of futures at Robinhood said, we as a firm are going to be looking to see if there's an acquisition that's available. That being said, what we also know is we have really good engineers that build great products here. So what we're doing is trying to balance the two. Essentially, Robinhood saying, hey, we are interested in getting deeper into the prediction markets. Now, this is a little confusing to me because they're already partnered with Kalshi and they didn't invest, to my knowledge, in Kalshi's latest funding round. Kalshi just raised at $5 billion. I don't think they've invested in Polymarket either. Polymarket just raised at $10 billion. So they must be looking at other prediction market companies that are out there that they want to expand their work with. And as a result, they may be thinking, hey, this is a big opportunity, just the prediction markets itself, which is probably going to produce a couple $100 million of revenue for them every year at this point. And as a result, they are continuing to go deeper into that. I'm surprised they don't have an equity stake in Kalshi. You know, I mean, like they account for 25 to 35% of Kalshi volume. So maybe they do, and maybe we just don't know about it. But it would be interesting to see if they end up partnering with them more deeply, or taking an equity stake, or even buying them out. Although I don't think Kalshi would want to be bought out. So Robinhood might be looking at other companies that are out there. Prize Picks has a $2.5 billion valuation. Prize Picks, do they do prediction markets? I've heard of them many times. I know they do a lot of different types of sports betting. Yeah, maybe Robinhood wants to expand completely to sports betting. So maybe it's not just prediction markets, but they want to do a variety of verticals. But yeah, exactly. Prize Picks is one of the companies I could see them potentially be more interested in. Yeah, they do prediction markets. Okay. So that makes sense as well. Bitfarms OpenAI deal coming. Dude, OpenAI touches your stock, just says your name, and it goes to the moon. It's pretty incredible. Amit, is the Golden Dome priced in for Palantir? I don't think so. I think the Golden Dome is something that is not priced in for a lot of the stocks that are associated with it, SpaceX, Andrew, Rocket Lab, Palantir. But also, we don't have much clarity on how much of the, I think it's like $68 billion those companies are going to get. So no, I would say the government growth is very strong, and we don't have any updates on Golden Dome, so I wouldn't say it's fully priced in. DL, thanks for the super chat. Does WorldCoin have utility, or would you go with the stock buying it? So again, Orbs is the treasury that's turning WorldCoin into their core digital asset. I don't know much about WorldCoin. I know that they have 17 million users on the platform. I've never used it. I saw a couple of people on Twitter that went to the WorldCoin location and they got the biometric scan. I mean, I don't know. Obviously, there's utility of 17. Really, in South Korea, a lot of people are using it more and more, and in Japan. But the question is, does that utility result in like a massive revenue opportunity? And maybe it does, but I think it's a little too early to tell. But if you're bullish on it, Orbs is probably one of the best ways to get exposure, or just buying the WorldCoin flat out. Yeah, Beyond Meat. Okay, so this one got hit today. This one was down like 80%. No, 49%. Okay, recovered. It was at 50 cents at one point. They filed not for bankruptcy, but they filed for something else. And that's what got the street to be upset. They had like a debt swap for the convertibles that they put out a while ago that they reported this morning. Yeah, so Beyond shares are tumbling after the company announced early results for its exchange offer of a 0% convertible note due 2027. Roughly 96% of the notes were tendered, well above the 85% threshold. That is not good. In return, Beyond Meat will issue $208 million of new 7% convertible notes due in 2030 and about 316 million new shares. So more dilution, way above their previous threshold. And that's why this stock took a nasty beating today. So they got to call up OpenAI and figure out how they can work together. But until then, you got Beyond Meat down 50%. Next Decade, was that down more today? Next Decade was down even more, 5%. I have not taken a stake in this. Again, this is the problem with some of these tickers, right? It's like Matt has said over and over again, you buy this and you hold it and you don't worry about it for literally the next decade. But I think all of us are so inundated with the short-term updates on this. Like, I don't know why it's down 4%, but if you ask Matt, who kind of got most people thinking about this, I don't think he would care if it's down 4%. Like, it really is a long-term play for some of these people. So I think people have to be honest with themselves. If you're buying Next Decade thinking it's going to go to $8 soon, like, don't buy it, because that's not the thesis from any of the people you heard it from, which is, hey, you literally have to hold this for a long time. You're not going to get that move. And then, down 4%, you should be buying. That should be if it's truly a decade-long hold, it should be something you buy. Nat Gas is tough to own. Yeah. And you don't get into a ticker just because it's at $6-7 and you think it's going to go up. Nat Gas is not an easy industry, and Next is not even producing revenues yet. VG is producing revenues, and they got their ass sued by BP, which is why, they continue to fall. So I think, and this is when people are like, oh, Amit, well, you missed this, you missed that. It's like, well, I don't understand the sector. And I'd rather, like Oscar, at 12, it was a great buy. And, it's at 20, and that's phenomenal. But I don't understand healthcare. So why would I put capital at risk at 12 in a sector that I don't know about that I could have blown up in my face? You have to be honest with yourself. Some of this shit, if you just don't know about, you just don't invest in it. it's really not that complicated. Like even for Bitmine, dude, I was late on Bitmine. I mean, I could have got this thing in the 30s. I got it ended up getting it at like 45, but it took me a while to understand this. And I love Tom Lee. I mean, he's an awesome guy. He's been on the channel a bunch of times. We've done podcasts together, but I wasn't going to buy it just for the fact that I like Tom Lee. Like it really took me some time to be like, what the hell is he even doing with Bitmine? Like what is happening here before I even bought it? So I just feel like you have to have peace of mind with a lot of these investments in order to be excited about them. Speaking of peace of mind and retail investors, here is Wall Street Journal's Gunjan Banerjee, who was on the channel about a year and a half ago, and here is what she's reporting on what's going on with retail investors and their psychology for buying the dip.
It's been a record year for this very popular buy the dip trade. S&P 500 has rebounded around 2% after one-day drops of that much this year. That makes it the best year for the buy the dip trade since 2019 and the second best year since the 1980s.
Those are incredible stats. I mean, going back to my time, the 1980s. And we saw it in DeepSeek Day in January. We saw it again with tariff liberation. That took a couple days, but the markets came roaring back. We saw it again from Friday, i.e. today. Who are these people? Do we know why they're buying?
Well, I think they've seen that this trade has worked. You know, as you mentioned, we have not seen that much volatility this year, but every time people have plowed money into the markets. And what's really remarkable is that I do think that this recent leg of the rally has been driven by Americans of many different income levels and of many different ages. As the Journal recently reported, 25-year-olds, around a third of them are in the markets today. In 2015, that figure was 6%.
Was this the story I read, and everything kind of gets mushed together on the weekends when I read my Apple News Plus? I was referenced the previous segment, about how people aren't buying homes in part because they're buying so much in stocks. They're putting their money into the stock market, not the housing market.
And it's worked. Take a look at share prices, right, compared to home prices. And I think that's why Americans of all income levels are also putting money into the markets. Income levels between $30,000 and $80,000 a year. More of those Americans are in the market than ever before, and many of them have entered during this bull market.
That is the true retail investor. We want market participation. We want everybody to feel that they can access this market. Yes. You don't need to be a multimillionaire.
And they feel that way.
And there's always a but. When I see leveraged crypto trades, when I see 3x ETFs up or down, I'm not setting up a warning flag, but at the same time, these are instruments where if they work, they're going to work really well. If they don't work, there is a lot more risk here, right? Talk to us about leveraged crypto.
I mean, I think it's leverage across the board. Yes. I was shocked to see that leveraged ETFs tied to the NASDAQ. NVIDIA saw some of their biggest inflows on record last week during this volatility. And stock investors who enter the markets on Friday are probably taking a look at their accounts, and they're pretty happy right now. Crypto leveraged traders are still nursing losses.
So to be clear, and if I'm wrong, please tell me, the leverage here is basically, it's not one-to-one. You buy a share of NVIDIA, it goes up, you make some money, goes down, you lose a little bit of money when you sell. These are multiples, right?
Exactly. This is 10x.
Or borrowed money, 10x.
10x, 20x, 100x leverage. And these trades are coming to the US.
There's not 100x leverage.
Well, that's abroad. That's on offshore exchanges. But
it does exist. But that exists?
It exists.
100 times leverage offshore
trades,
stuff.
Yes.
Crypto trades exist.
And I would bet that U.S. exchanges and brokerages will keep amping up the leverage. On Coinbase, you can access 10x leverage on Bitcoin and Ethereum. That was for the first time over the summer. And I think they're going to keep pushing the envelope.
If these crypto assets continue to go up, those people are going to make a lot of money.
Right, but take a look at what happened on Friday, right? People in these trades can also lose a lot of money, lose everything on days like Friday. I called it the get rich or get wiped out trade.
Yeah, do we know how much of that leverage may contribute to sort of the more volatile declines that we see, right? So the stock market won't go down, 0.25%. It'll go down 3%.
Yep.
And then it comes back roaring right back. Those extreme movements, or at least my perception sitting here of extreme movements, has to be tied, if it's real, to those leverage trades or no.
Look, what I often hear from traders, especially the past few years, as we've seen the rise of options trades, one-day options trades, leveraged ETFs, right? A lot of these trades rebalance around the close. So a lot of traders do think that that can exacerbate volatility on big up days and big down days.
Is this, you said offshore, I would imagine that there's not just U.S. retail investors buying in. I've heard a lot about investors in other places like South Korea. This is a global market, correct?
This is a global phenomenon, and you will be shocked at how much activity is taking place in these so-called perpetual futures, around 68% of Bitcoin volumes.
What's a perpetual future?
So
Again, Robinhood is also bringing perpetual futures to their platform soon. Again, we talked about it in the morning, but perpetual futures just basically let you go long and do the sort of 20, 30, 50x leverage that Gunjan was talking about. You guys are hilarious in the chat. You guys are genuinely, you guys are genuinely hilarious in the chat. But the point is, look, her argument is retail is continuously engaged in this market. They're not going away. They're continuing to buy the dip. The top 3 stocks that were bought on Friday were Meta, Hood, and Nvidia. And, like, it's almost the end of the year. Do you take a shot and pile into some of these harder retail trades that have continued to gain excitement, even if you're not in them? Or do you add to your normal positions, add to something that's relatively cheap and hasn't moved like an Amazon and call it a day? I don't know. It really depends on how much you want to up the risk ante. But with rates coming down, is it crazy to say Iran breaks through 75, 80 by the end of the year, especially if they get another deal? Like, no, it's not crazy. Cost of capital is coming down. Earnings growth is good. And, they could announce something overnight that changes the company. It's just, do you want to take the risk? And based on what Gunjan's saying, obviously a lot of people are continuing to want to take that risk. Dude, you guys need to go outside, bro. You guys saying I need to go outside. You guys need to go outside. Goodness gracious, bro. I feel like if we want to get engagement up on the channel, we just need a co-host at this point. Like, and I know exactly what type of co-host to get. Goodness. This is some good comments, though. There's some good comments. Roger, thanks for the super chat. Reuters, Gunjan is a MITS dentist. Yes. She was on the channel, right? A lot of you guys are new. A lot of you guys don't remember when she actually came on the channel. She was on. Yeah, she was on, bro. This is this old video. But she was there. I'm looking at that right now. Look at that. I got to get her back on. She was on a while ago. But it was fun. She's dope. She's from the Wall Street Journal. And yeah, she covers a lot of what's going on for the retail ecosystem. Anyway, so those were some of the main headlines. What else do we have after hours? Do we have anything else? Oh, a couple things. So Kalshi is reporting government shutdown is going to be worse, bro. Kalshi is reporting we are going to have the longest government. They're not reporting, but the prediction market is saying that we are likely to have the longest government shutdown of all time, which would be kind of crazy if that ends up actually happening. But that is the argument from Kalshi. And if that's the case, then obviously, it's going to be a little wonky in terms of where we're going to get that government data. Navitas, by the way, it's up 18% after hours. Not sure why. What the heck is the headline pushing this stock up? This stock, I think Jose is a fan of. It's in the semiconductor space. Oh, there you go. Navitas supports 800 VDC power architecture for NVIDIA's next generation AI factory computing platforms. Boom. There you go. This was actually the same headline for power integrations, this 800 VDC power architecture. So it looks like NVIDIA is working with multiple companies to make sure that the architecture they need for the next gen AI factory computing platforms, Jensen has talked about these AI factories for a while, has momentum, and looks like Navitas is playing a role there. Wow, $12. Take a look at that. $12.30 after hours. It was already up 21% during the day. So I guess someone knew that there was going to be probably some level of collaboration, and now you got the official press release after hours as that continues to go higher. Kane said, I almost sold some of my Navitas today. Almost, or did you? If you didn't, then you should be happy. If you almost did, then you should just be grateful you didn't. But goodness, bro. I could understand selling it today, though, right? Because it was up 20%. So you might say, hey, I'm going to take some profits. There you go. That is green. The top 20 stocks that were traded in the options market today: NVIDIA, Tesla, IBIT, AMD, Amazon, Apple, Broadcom, Palantir, Beyond Meat, Marathon, Intel, Opendoor, SoFi, MicroStrategy, Rigetti, which crossed 50 today, Big Bear AI, EOSE, Energy Play, MP, Rare Earth Metals, Ethereum ETF, and then IREN. So look at that. In the top 20 stocks that were traded today, Marathon, Bitcoin miner turned data center play, Rigetti, Quantum, MicroStrategy, Crypto, Big Bear AI, EOSE, Energy, MP Materials, Rare Earth, Ethereum, and then you got IREN, Bitcoin miner turned data center. A lot of these names are not Netflix or Marvell, or SMCI. I mean, these are names that are relatively smaller companies, but they're getting a lot more excitement. Navitas right there, 1184 after hours. Deneen says my average price on Navitas is $258. Someone says I have 5,000 shares at $5. I mean, this stock year to date has to be up more than 100%. Year to date, 185. Now it's basically 200 with the after hours move. It's been a lot of good opportunities this entire year. There's been a lot of good opportunities this entire year, and you don't have to be in all of them. But even if you got one or two of them, I mean, last week, Rocket Lab and ASTS, a lot of people that are heavy in those names, you've done well. The week before that, AMD. Obviously, the Hood, the Palantirs, like all these names have just really begun to make some. Google, a month ago, right? A lot of people were stuck in Google at 150 for 9 months until it broke out. So Tesla wrecked a lot of portfolios until it finally pivoted at 330 when the whole Elon compensation package started coming out. So it is seeming to be an everything rally across the board. Precious metals are leading it along with these data center plays. And as long as we get a meaningful Q3 earnings report, hopefully it continues. Hopefully it continues. Applied Digital, yeah, did that break 40 today? APLD 35. It almost broke 40. 35. Yes, Google is investing $10 billion in India. We talked about that last week. They're also investing $9 billion in South Carolina. So I mean, Google is getting ready to spend as much money as they possibly can on these data centers. And they're obviously trying to do it in a way that continues to increase momentum. Here was Mr. Ryan Detrick today speaking about navigating October volatility.
You look just at the last 2 days, yes, probably 2 days now of 1% moves. Just October 13th, little history for everybody. At 89, the S&P dropped like 6% on the UAL LBO deal that fell apart. And then in 2008, this day, October 13th, gained 11%. Mike, I'm not sure why, but there are more 1% moves in October than any other month. After I guess I'll say we've been spoiled with this rally. Maybe some October spookiness and volatility is perfectly normal.
Certainly normal. I guess the question is, did it kind of break the market stride in any notable way? I mean, it's essentially, once you've got the people who are in it because you can't get the market down, and this is a low volatility grind higher, and there's no real use in waiting for a dip to say, okay, maybe we're going to get a deeper pullback.
You're right. I love the discussion with Paul a little before I came on. He talked about some of the internals that are weakening. I look at things like regional banks. Those are lagging big time. Housing's lagging big time. Look at high yield credit, right? That's starting to crack. So by no means are we saying there's this big monster under the bed. But Mike, there are some little things that have me concerned. And the last one, put to call ratios, they're quite optimistic. And from that contrarian point of view, I just think it makes sense after a 36% rally in 6 weeks. Maybe we're due for just some, I guess, a Charlie Brown shirt type of volatility.
You mentioned 35% up in 6 months, yep. Right? So I wondered if we were also suffering from a little bit of anniversary-itis in the sense of, wow, look at this massive 6-month move. Obviously also just hit the 3-year mark of the current bull market with some great gains, although maybe not, kind of middle of the pack on the 3-year anniversary. Mm-hmm. But what can we expect from here as the bull market matures?
Yeah, we're still pretty optimistic, have been for a while. You look at, there's been 5 other times we've gained more than 35% on the S&P in 6 months. 1 year later, higher every single time, up like 13% average. I know some other guests have pointed this out. I'll just mention it. Once you get a bull market that gets to this point on its third birthday, there's been 5 other ones back to 1950. All right. The shortest any of those other bull markets went was 5 years. The average, Mike, was 8 years. So listen, the reality is this is a strong bull market still, and I think it's just going to be over because we're here and it's 1929 or stocks are overvalued. We're not minimizing that, right? Earnings are still strong, profit margin strong, a dovish Fed. There are still reasons to think that this bull market's alive and well, and it might last longer than a lot of investors expect.
Yeah.
Look, earnings growth is on the side of the bull market continuing to last. And when you see a lot of these names get more and more deals, Navitas, they're still breaking over $12. It doesn't look like it has to slow down. It really doesn't look like it has to slow down. I think Bitfarms right here, this could possibly be the reason for it. 8 Ball, thanks for the super chat. Bitfarms, right before the crash on Friday, secured a $300 million project financing in a debt facility. So it looks like they raised $300 million, which is bullish. I think they got a price target today as well. Northland increased them to $7. But the magnitude of the move today, I mean, that just seems like you're getting a lot of new investors interested in the stock. Mind you, this thing was at wasn't this thing $2 like a couple weeks ago? Yeah, it was literally $2 on September 29th. It was $2.50 on September 15th. It's up 117% in the past month. So a price target increase. Like, if you're a stock inside of the data center space or the energy space or the nuclear space or the rare earth metal space right now, and you have an analyst upgrade, you have some level of financing, whether it's through debt, equity, raise capital, however it is, and then you have like one thing that you can point to about capacity for data centers, licensing GPUs, whatever. You need some type of tailwind that is more specific to your industry. Your stock is going to go up. I mean, we've seen example after example after example over the past couple of weeks, whether it's a Cypher, Iren, TerraWolf, Bitfarms, CleanSpark, Marathon, all these names, EOSE. You get any upgrade and you get a little bit of juice, boom, you move higher. And I think that's what we're seeing right now. Where was Open Door on the day? Open Door was down. Open Door down about 4% on the day. PayPal got downgraded to sell from JP Morgan, and I think that's what kind of wrecked some of this momentum today. 68.90. They did unveil their ads manager last week, which got them above 76. But right here, back below 70. And look, it can be really annoying for people that think they're in really good, high-quality companies that aren't moving as much as like a Bitfarms or a EOSC. I think the important thing there is to not get resentment. Like, the worst thing you can do for your mentality as an investor is be resentful of someone who got in USAR and is up 27% on the day, or NP and is up 500% for the year. Like, look, at the end of the day, if you pulled the trigger and you bought MP at 20 and it's at 97, like, hats off to you, right? So it's one of those things where I wouldn't get resentful for it. I would just try to analyze, hey, like, how could you have done a better job? And this is me talking to myself as well, to try to find that trend before it took off. And then the question becomes, do you want to risk the capital at these prices? And that is a personal decision, but everyone's got to make their own conclusion on, is it worth? Like, the reason I like AMKR is because it's cheap. It's a semiconductor name that hasn't run. It's in a sector that obviously is growing massively with CapEx. And then there's actual company-specific tailwinds on AMKR that are really easy for me to understand. And it's cheap. Like, the most important thing is it's cheap, bro. Like, I don't want to buy stocks that are super, super expensive. I'll put the one pager on AMKR right there in the chat that I shared last week. And so I think the question to ask yourself is, do you think a Bitfarms is cheap? I know at like $5 it could look like it's cheap, but you're paying $3 billion for this company. Is that cheap or not? I think that's the question that people have to ask themselves when looking at getting into these names. Bought MP at 45. I'm up 100% now. See, and the thing about MP is they had actual tailwinds that didn't even have anything to do with like a bull market. They just had tailwinds in regards to A, Trump decoupling from China when it comes to rare earth metals, and then B, Apple, the Department of War, all these entities investing in them, the Pentagon, like, those are catalysts that are hard to deny. And that's why MP ended up getting a really, really decent run. LAC, Lithium Americas, that one was also up another 13.5% on the day. Yeah, Rigetti, 150 to 56. I mean, dude, you guys know Palantir owned Rigetti at like $2. I think they sold it back in the end of 23, early 24. but they owned it. If they held on, they would have had a 20 bagger. But they didn't. So I don't think Palantir saw the quantum computing ecosystem growing as much as it did, but it did. And as a result, now you're here. So I don't know. I think at these moments, it's very important to not get super, super, super euphoric, but also it's important to look at these opportunities that present themselves and then ask yourself towards the end of the year, do you actually want to invest? Now, speaking of investing, the EU came out today and they rolled out a $1.1 billion plan to ramp up AI in key industries amid sovereignty drive. I think this headline was trolled by a lot of investors today because they were like, Europe's thinking of investing $1 billion, which is simply not enough to actually compete meaningfully in AI, especially when you have Salesforce committing $15 billion today into San Francisco, investments over 5 years. Google's putting $10 billion into India. So when it comes to ramping up the investment spend, you got a lot of investors thinking, hey, Europe's not really doing it at a super competitive level, which is also feeding the momentum for American stocks because a lot of these American AI names are ready to spend. And they're not afraid of spending. I mean, literally, JP Morgan today announced a $1.5 trillion security and resiliency initiative to boost critical industries. A lot of that having to do with rare earth metals, crypto, quantum, tons of different things were mentioned. Energy, obviously. I mean, you got the EU saying we're going to invest $1 billion, and you have JP Morgan saying we're going to invest $1.5 trillion. So there's obviously a sort of dichotomy on where the money is coming from and ultimately how much of an impact that money would have. How will the quantum bubble pop? Well, dude, I mean, it's important asking yourself, is it even a bubble that is going to pop? Right? Like, is it? Look, obviously the valuations are aggressive and some of these stocks are getting insane premiums. But if quantum computing grows into an industry and there's something real behind the technology, maybe these stocks are not at the levels there are today. But do they have to go back down to zero, or at least go down 50 to 60%, which I think would be the definition of the bubble? I don't think so. It really depends on how much it grows. So I think the sort of takeaway from this is you can't get too bearish on the broader market if you're seeing froth and you're seeing these things that are running that maybe you have no idea why they're running, but you also can't FOMO into them. And this is a hard part of market psychology. Can you be okay with enough of the gains you put up on the year to not YOLO into critical metals, CRML, which is up 72% on the day? Because when something goes up 72% on the day, you start asking yourself, why the hell are you not in it? And it's up 72%, right? Like, well, maybe you just didn't do enough research in that space. Maybe you didn't care to take that risk, but is it worth buying it after it's up 72%? FOMOing into Amazon and Google. See, that's the type of FOMO that I think is worth having. I mean, look, it really is a psychological, like, Amazon might be stuck at 220 for the rest of the year, but buying into Oklo might go down 30% for the rest of the year, or it might go up 30%, or it might be flat. But do you feel better sleeping at night with Amazon or Oklo? And maybe it's Oklo. And if that's the case, then you buy some Oklo. But if it's easier to sleep at night, I mean, you're talking about, hard-earned money in a name that hasn't really run all year and you're not worried about its revenues or its profit margins or its earnings because there's like something of substance there. Yeah, you're not going to get those astronomical gains, but you're also not going to have to worry about losing it. And I think that is important. But obviously, it's aggressive to see a lot of these names pump every single day and good quality companies are kind of stuck. But at the same time, ironically, it is really important that Amazon, Google, Nvidia, Meta, Microsoft aren't pumping like shitcos, right? Like in Oklo, which I'm not saying is a shitco, but obviously the perception is $25 billion market cap, no revenue. Like people are assuming this thing is just egregiously expensive. It would not make sense for like an Amazon to be worth $5 trillion today and be pumping every other day 4 or 5%. Like people would say we are legit in a bubble if there's that much euphoria that much money is coming into a blue chip stock every single day. But if $25 billion out of a $35 trillion US stock market wants to go into Oklo, I mean, that's just not a bubble. Like it's frothy, yeah. And Oklo might get a deal tomorrow that turns that zero revenue into $5 billion of revenue, which is why that multiple is being pulled forward. But it's not a top in the sort of conventional sense. And if Amazon legit was gaining hundreds of billions of market cap every day for no reason, that would be pretty toppy. because it would make no sense, which is exactly what happened in 2021. So ironically, as annoying as it is to see some of these names gap up, it's also important that the most important companies in the world aren't doing that, because A, it means there's an opportunity in them, but B, it means that they're likely not as bubblicious as some of the other names that, catch a bid for whatever reason they're catching a bid for. And at the same time, the other thing that everyone has to remember is we might be in the greatest revolution of technology of all time, which means it would be one of the greatest decades for investing of all time. And there are going to be hundreds of opportunities across the board, potentially thousands of opportunities. And if there are those massive thousands of opportunities, you're going to get names that randomly take a run. And you can't be too afraid when they do run, because that is a function of a bull market, especially if the most important names are not in a bubble. You're going to get other names that end up getting a bit of a bid there. Yeah, just looking at gold proves to you that the wall of worry continues to be there. But I mean, I cannot deny it is incredible to see the data center names gap up the way they're gapping up every day. It is incredible to see Oklo move up 18% in a day. And like realistically, your gut tells you this isn't sustainable. But then again, who knows? Like we had a 3% drawdown, $20 billion of leverage in the crypto markets got wiped out. And the next thing that happens 72 hours later, Oklo goes up 18%. I mean, it's a hard sort of place in the cycle to define what exactly is happening. But I think you have to come to the conclusion that as long as the most important companies in the world aren't getting to the point where they seem egregiously valued, then it's okay. Because whatever happens to the other parts of the market don't really have an impact on the broader bull trend. Greatest technology revolution of all time does not equal straight up every day. There will be losers. We just need to stay long the winners. Yes, I would agree with that as well. I haven't looked at TAC. I know Camilo's bullish on it. Trans Alta Corp. I know it's an energy name for Calgary, but I've got to watch their podcast on it because I haven't looked too much into it. Sohm says, yes, I'm fine missing the Oklo-like stocks, just not for me. Got to be able to sleep. Yeah, I agree. Put in the chat if you're in an Oklo or something. I mean, put in the chat if you're in one of these names that doesn't have any revenue but is massively moving. Because like, and what are you doing? Are you selling? Are you buying more? Are you just holding? Like if you bought Oklo at $10, I mean, look, it's at 170. Like, should you take some off the top? Sure. But like also it's your margin of safety is so strong. Where just like, if it goes down 20%, like would you even care? Right? Just beam an R count. Does it count? I mean, I guess so. Well, it's in the meme stock ETF, so BMNR has to count, right? It's a meme stock as per Roundhill. No, I mean, look, BMNR is more of a crypto play that's leveraged against Ethereum. So I'm talking more about companies that like are supposed to have revenue and earnings and don't. I mean, I don't think anyone's expecting revenue out of BMNR. They're just expecting Ethereum to go up. A lot of those names, again, have continued to run. I see a decent amount of Oklos. 450% up on Open. Well, Open's going to have revenue, even if they don't have profits. So you are going to see some revenue in Oklo or on Open Door, which is not too crazy. I mean, all the rare earth names that don't have any revenue, USAR, CRML. The funny thing about CRML is we saw it at $10 2 Fridays ago when the Reuters rumor came out that Trump was going to be buying them, and it went up to 14. And then the Reuters rumor came out and said Trump's not buying them. Or sorry, the Secretary of Energy came out and said we're not buying them, and it went down to 11. And now it's at freaking 25. Why? I don't know. Well, I do know. It's because rare earth minerals. So it's like that entire sector is taking off. So CRML is just going to go up. To $26 after hours, 74%. Rigetti at 10, Navitas. All right, so look, a decent amount of people that are in these names, you got to ask yourselves, do you want to take some profits here or do you want to let this play out over the next coming years? And ironically, dude, again, like letting this stuff play out over the next 5 years might end up being the best decision. Like just because the names are frothy does not mean they are an automatic sell. Because we might need a lot more demand for these industries that are getting more excitement. Quantum might actually become a thing. Nuclear energy might become more important than it is today. And like all those sectors might take up. Now, maybe that doesn't happen in 2026 when you get a little bit of a drawdown, a little bit of a pullback, and the market kind of realizes these companies don't have much to show for it, those get hit. But if there's any indication that it's a very real industry that's not slowing down, I mean, maybe those stocks really don't have to slow down, even if they don't, continue surging the way they're surging 4 or 5% every day. So it's a question of how do you individually analyze it. Now there's a decent amount of people in Rigetti. $11, $12. That was the average that people got into. I remember looking at Rigetti at 50 cents because Palantir owned them. And so I was looking a little bit at their balance sheet, but I was like, dude, I don't really understand quantum. I don't understand what's happening. And regardless, whether you understood it or not, those stocks have started to do very well. Tom Lee did give a talk at the Token 2049 Singapore conference, and that talk is finally out. Here's a part of it that I thought was actually really important, speaking about the most important financial institutions and the market caps of how those institutions are continuing to grow.
CO2 is above 600. They'll say that banks work fine. I don't see how JP Morgan can become more profitable. Well, actually, companies that are natively built on the blockchain are inherently more profitable. For instance, Tether is raising capital at a $500 billion valuation. Look at the list of the 12 largest banks in the world. Tether is the second largest. I mean, think about that. Tether is 50% bigger than Bank of America, and Bank of America is a giant. It's twice the size of Citigroup, twice the size of Morgan Stanley. It's even bigger than Goldman Sachs. Okay. But here's what's interesting. If you look at the number of employees at Tether, okay, JP Morgan is an $869 billion market cap company with 317,000 employees. That's a market value of $2.8 million per employee. Tether has 150 employees. That's less than JP Morgan's analyst class, It's probably like the June analyst class. And so that means Tether has a market value of $3.3 billion per employee. I think that's what you have to realize. Tether, which is a native blockchain company using public chains, has a value nearly the size of JP Morgan and with only 150 employees. So as Exhibit A, in my opinion, clearly building companies and rebuilding Wall Street on the blockchain is very profitable.
So he kind of went on to make the argument that the reason companies are incorporating with blockchains is because it makes them more efficient. And the fact that Tether can get a valuation almost the size of JP Morgan and have, 1/100th of the employees is a big deal. And I think more and more companies are recognizing that not only can AI make them more efficient, not only can blockchains make them more efficient, but the intersection of both of them, which is kind of the point of what Tom Lee was saying in that talk, is something as a macro trade cannot be denied. And as a result, that's why he continues to be excited for Ethereum. Jose says, can we have days like this forever? Jose, we got to get you on the channel tomorrow. I think you're back from Arizona now, right? We got to get your take on all this AMD, OpenAI, Oracle, OpenAI, Broadcom, OpenAI. OpenAI is just being passed around, bro. OpenAI is the entity that is central to making all these stocks get some love. But yes, I would love to get your take, Jose, on it tomorrow. Again, 10 gigawatt deal with Broadcom. I did not expect to see that this morning, but you got that. And that's what got Broadcom really moving. Is Navitas still moving after hours? MP is still moving. Navitas, wow, almost hitting 13. I think Jose's in that one. This is one of the ones he likes. And this one also continuing to go green. I saw a video where Tom said Tether is buying up gold. Yeah, it looks like Tether is tokenizing gold, which, I mean, it makes sense they would do that, but I didn't even think of it. And that could be one of the reasons we're getting a ton of this gold demand. Richard, thank you for the $20 super chat. Let the good times roll. Richard, thank you for being here. And thank you for the super chat as well. Paul, thank you for becoming a channel member. Calvera, thank you for becoming a channel member. Shrikant, thank you for becoming a channel member. And Kuya, thank you for becoming a channel member. We'll end off on this super chat from Daniel. If you were going to start a long-term portfolio today, what 5 stocks would you pick? It's a great question. What 5 stocks would you pick? Long-term portfolio today. I mean, I'm biased, but I'm going to name the names that, I'm continuing to hold for the next 10 years. Long-term, I'm assuming is 10 years. Got to put NVIDIA in there. Got to put Palantir in there. Got to put Hood in there. I have 2 left. I feel like it's got to be Google or Amazon. One of those at least. I don't know. 5th one could be Grab. It could also be iBit with Bitcoin, right? Just like long Bitcoin. It could also be Tesla, easy long. Like, it's hard to narrow it down to 5. But I know my 3 for sure would be Hood and Palantir. Those 3 for sure. I mean, BM&R could be up there as well, right? Like, if ETH and Bitcoin do what they do over the next few years, you would imagine those take on. Now, would I want freaking Oklo in there? Would I want EOSC and E Energy? Would I want Bitfarms in there? Like, it's hard to definitively be like, yeah, those would be my long-term portfolio. But, the names that have done well already, I think it'd be easy to have them. Desi says, I'm so happy with Nebius. Stock Talk told me on that months ago. Yeah, see, I was talking to Stock Talk about Nebius, and he got into that when it was 25. And he's like, bro, at 140, this shit makes no sense. He's like, this shit is stupid at 140. And he's like, all the bulls that are screaming Nebius is a buy at 140. He's like, I'm the one who bought it at 24. I was one of the only names on Twitter talking about it. These bulls are out of their minds screaming that it's a deal at 140. Now, there may be a legitimate argument for why Nebius is a deal at 140 if they get another deal with Microsoft that was to the tune of 20 billion. But he was just like, people are going crazy. It's like, that valuation does not make sense. It made a lot of sense at 20. It doesn't make a lot of sense at 140. And I would say the same thing for Hood. Like, I love Hood. But at 150, no, I'm not buying that shit. Like, no, like, and I think Tanner would say the same thing. I think Roy would say the same thing. And we're some of the most bullish people on Hood, but we're like, bro, this is like no, we were buying this thing much below this price for a reason. So I think the moral of the story is the earnings growth enough to get you to buy in to these all-time highs, expecting more all-time highs? And maybe it is, but if it's not, and you're already up a lot this year, maybe you don't need to take that risk. It's just a question of, how you navigate it. So that's what we got. I'm getting to be the same with ASTS. Yeah, I mean, look, if you've been in ASTS for a long time, even if you got in at 20 or 30 bucks, at 91, is ASTS the best? This is a $35 billion company. They don't do any revenue. And I don't say they don't do any revenue as a diss against them. It's just like the facts. They don't have any revenue. That is not a reason to say the company's a horrible company. That's just one of those things where you have to be, at some point, come to grips with reality of like, okay, how much am I really willing to pay for this type of a name? Unless you're expecting, $10, $15 billion of revenue overnight when the deals start pouring in. But ASTS is an amazing narrative. It has an incredible moat. It has a passionate community, and it deserves the premium. It's just, is it a deal at 90? And it was at 36 3 weeks ago. So if you missed it, like myself, you missed it. If you missed the dip, and it sucks to suck, but like, do you cry so much about it that you FOMO in at 90? Maybe it works out, maybe it doesn't. But like, I think those are the questions a lot of people have to ask themselves now. But look, I'd rather ask these questions than freaking, seeing the S&P down 10% and having to worry about other types of questions, which it felt like on Friday there potentially was a trajectory to see how far that would go. And it seems like that pivoted, which is okay. So I think these are good questions to ask versus the opposite, which could have, potentially happened if we really had some issues. That's what we got. That's what we got in the market. Stock Talk's not selling at 140 either. I agreed. So again, I'm not selling my Hood at 140 either, but I'm not buying more. So it comes down to how much exposure do you have, or do you want to have if you don't have any exposure versus, if you want to start some type of a long-term position. All right. I think that's it for us today. We are done. We'll be back tomorrow on the market open. 2 things for today. So number 1, daily recaps are back. Daily recaps are back. It'll probably be posted around 7:30, 8 p.m. Eastern. So the daily recap, I'm going to try to keep it to 15 minutes because usually if I end up talking, it ends up becoming like 30 minutes. I'm going to try to do 5 stories, 3 minutes each. That's going to be the structure. 5 stories, 3 minutes each. The most important stories, 3 minutes per each story, 5 of them. And I'm really going to try to keep it to 15 minutes or below because, If it ends up being 20, 30 minutes, it kind of defeats the point of a daily recap. So we're going to have that come out today. That's starting. I think the longest daily recap was 37 minutes. It's like 2 months ago, and someone commented, they're like, "Hey, dude, I really love the format, but I don't know if it's a recap in 37 minutes." I was like, "Yeah, you're right. I just ended up talking too much on this one." But so that we're gonna do that, and then Tech Bros tonight with Tanner and Roy. Tech Bros with Tanner and Roy. So I will be back at 9:30, and we'll talk about everything else that's going on in the market as well. Technical Tuesday tomorrow. Yes, Technical Tuesday tomorrow. So Tech Bros today with Tanner and Roy. TT tomorrow with Jason. Daily recap probably will be out in about 2-3 hours. It'll be, call it 8 p.m. Eastern every day. That's when you can count on it to be uploaded. And I think that should be pretty much it today. And then the deep dives for the Substack launched this week as well. So it'll be out towards the end of this week, and we will get the first deep dives up on that Substack. And you guys will be able to read it. Chris will be on for Macro Thursday. We couldn't do last week. By the way, my tooth, for those that have been asking, is like feeling a lot better. So the root canal, the antibiotics really helped. But yeah, Chris will be on Thursday. And we'll probably get Steve on later throughout the week. I was on Steve's show yesterday. We did an episode on alternative assets. I'll link it right here for anyone who wants to watch it. But I think it was a fun episode. We got to talk to one of his buddies who's making a killing off selling Pokemon cards. And, you're starting to see a lot more excitement in that overall ecosystem for alternative assets. Steve is, a big fan of that industry as well. So that's the link right there in the chat. Get Gunjan on. Dude, you guys are wild, bro. Like, I can't even imagine having a girl on stream. If you got, like, we're watching a freaking clip and you guys are going crazy, bro. Someone's like, Amit, where are your hands? Show your hands. I'm like, dude, what is wrong with people? Goodness. I think it makes sense though, right? You get a beautiful woman on, like, it just keeps people's attention. But like, goodness gracious, dude. That means I've got to be really good at talking, bro. Because I'm not a beautiful woman, but you guys continue to show up every day. So there's got to be something in the way I communicate it's got to be the humor, bro. I'm telling you, it's you guys don't want to admit it, but it's the humor. Because you guys, if you go that down bad for a girl on the screen, there's got to be something else that keeps you here. You are handsome. It's because we're gay. Oh my goodness. Oh, dude. All right. Last story of the day. Dude, Grindr is going private. What a freaking story with this stock. Apparently Grindr, they came out today and they said, yeah, we're going private. Let me get the exact headline for you guys, but this is just, it's one of those stories where sometimes public companies aren't able to end up fully doing it. So the headline was, Grindr insiders are exploring a take-private deal after the stock's recent slide triggered a forced sale of pledged shares. A deal could draw national security scrutiny due to Grindr's past ownership by a Chinese firm, all these other details that are associated with it. But the point is, they're probably going private. So I said, well, back in the closet. Back in the closet for Grindr. It's not an original joke, but still. Like, they're basically going back in the closet, bro. They were not able to make it as a public company. But that's what you got for Grindr. So there you go. Oh, is this the actual Tom Lee just responded to this? Is this the actual Tom Lee drummer? Is that how I didn't look how the Tom Lee drummer guy looks. Okay, well there you go. That's Tom Lee the drummer. There you go. All right, cool. So I think that's it. What happens to stockholders? They get liquidated at whatever price. I think it's like $15 a share or something. So, if you had leaps for like $20, those kind of go to zero. But that's what you got. Same hair. Yeah, he has the same hair. He has the same hair. Trump is not live, but Trump was live in the morning. He was in Israel, then Egypt. I think he's back on Air Force One coming to the United States. Look, peace in the Middle East. We're going to see how it ultimately plays out, but the market so far is not too upset by it. And if that continues, then obviously it could be a broader tailwind for less geopolitical instability. Wow, Taylor Swift broke the 2025 streaming record with 1.5 billion streams and 5 million albums sold so far in 2025. That's her newest album. Goodness gracious, bro. That album came out last week. 1.5 billion streams in a week. We didn't even listen to it together. We said we were going to listen to it together. That's massive, bro. Music's been kind of dead this year. I don't know how much people keep up with music. I mean, I'm not the biggest music guy, but music's been kind of dead. So I guess you needed something like Taylor Swift to revise it a little bit. All right, so I think that's it. I think we're done. Navitas, are we still moving after hours? That one, big one after hours. Congrats for anyone who's in that. Congrats for anyone who's in Broadcom. Wow, 1317, 60% for the day. Absolutely incredible. That continuing to make a move. All right, congrats. If you're in it, you are doing very, very, very well. And again, every day it's a new name that's kind of moving, which is a good thing. So tomorrow, the most important thing for everybody are earnings. We got before the open, JP Morgan, Goldman Sachs, J&J, BlackRock, Citi, Wells Fargo, and Domino's. So we have some massive names tomorrow. I'll be live at 8:45. We'll cover those names and we'll get into all the earnings growth. And hopefully we get some good earnings. And if we do, then we can start out Q3 earnings. Not be too bad. All right, that's it. Daily recap. We'll be out in a couple hours. And Tech Bros will be out later tonight with Tanner and Roy. Powell is also speaking tomorrow. I'm not sure what time exactly Powell is speaking, but Powell is speaking. So we'll see whatever Powell says as well. What are you doing for your birthday? I'm doing nothing. I'm working. It'll be a Tuesday, I think my birthday, or a Monday. Doing the market open, market close. Yeah, it's a Monday. Dude, honestly, I don't feel like doing anything this year. Like I am so tired of this year has been a busy, busy year. I would very much like to just stay home and do nothing. I genuinely don't want to do anything. So I'll be live. Market open, market close. And that's where I call Gunjan. I do have her number. Dude, I texted our boy Jay Cush over the weekend. And I was just like, congrats on, the peace deal. I didn't know he was that big of a negotiator in the deal. I mean, he told me he was still working with the administration, but I didn't know he was that pivotal. I mean, he was one of the guys. He was one of the 2 negotiators that got the job done. I didn't think he would text back, but he texted back. So we got the Jay Cush name drop. Hopefully we have different name drops over the coming years. I really didn't think he would text back, bro. I'm like, dude, the guy must have hundreds of thousands of people texting him right now or something. But he texted back, so he's a dope guy. All right, that's it. Thank you, everybody. We'll be back. I didn't think he texted back. Sounds so gay. Okay, I am done. Thank you, everybody. Goodness gracious, that was a good one, though. That was a good one. That was hilarious. That was freaking hilarious. All right, I'm out. Daily recap. We'll be out in a couple hours. And Tech Bros later tonight. I just can't beat the allegations, bro. I really can't beat the allegations. All right, bye, everybody. Have a good one.